Hello to you and welcome, welcome, welcome. What an awesome introduction from Eddie Perino. If you haven't heard him, I'd highly recommend that you go and check him out on his playlist, etc. Salman, I just wanted to congratulate you. You've clearly done a presentation with me because I always say, hey, where are you from? Come and join us. Let us know where you are in the world. And you've already said good morning and from South Africa, Johannesburg. So you clearly know where I'm going with this. And Maria, I'm glad that you enjoyed the presentation from Eddie. He's an interesting character because for me personally, I've got a huge amount of value out of him over the years. And particularly when I'm in tough times, I actually try and listen to him every morning. And I often find that I get these incredible inspirational messages and sort of gifts as to what I should be doing or what I should be focusing on. So yeah, go and check him out. So ladies and gentlemen, time to rock and roll, time to get started. And I'm super excited. One of my dreams, one of my goals is to do a TED Talk. And so what we're trying here is to emulate the TED Talk style. My idea of, and I've studied quite a lot about TED Talks, my idea of a good TED Talk is firstly that it's full of stories. So it's not theory, but actually stories. If you look at the best kind of TED Talks out there, they're all about stories. And the second thing is that they try and keep it short. Now, I have a challenge with that. Firstly, I've got 28 years worth of knowledge that I want to download and share with you. And two is brevity is not one of my greatest skills. So I am going to try my best. But what I've agreed with the team, Shane and Alex and the team, is that I'm going to go as quick as I can to go through this to try and really get to the core nuts and bolts of what's important. And then what I'll do is I'm going to do an FAQ afterwards. So for an hour afterwards, I'm going to give you a free FAQ. So if I go too fast and I give you too much information, then so be it. If you're feeling a bit overwhelmed, come and join us in the FAQ. It's free. And I'll try and answer any questions, remove any blockages that you got. Okay, so let's start without further ado. Time for a TED Talk. And this is my practice run for when I actually do a proper TED Talk. So what are we going to talk about? In simple terms, it's diversification. It's how to build a globally diversified portfolio and create passive income. That is the focus. But if you simplify things, and I'm a great believer in simplicity is power, if you want to bring it down to one word, it is diversification. So I always like to start with a question because it kind of gets people in the room and gets them present. And so the question I'd like is, what would it mean to you in 12 months or less to be earning $5,000 passive income without any hassle or complexity? Just think about it. What would that mean to you? And secondly, how would you like a system which can statistically help you get there 5 times faster, safer, and simpler? Now, just to be clear, some people immediately go, oh, this is a get-rich-quick scheme. It's not that. I'm not interested in that. There is no way, in my opinion, to do a get-rich-quick scheme. But there is a way, to do things in a systematic and methodical way and to actually get results 5 times quicker, which I'll share with you how to do that. And again, not my opinion, it's copying what the wealthiest people in the world are actually doing. So I want to start and I want to see who resonates. So meet Jordan. Jordan is a 55-year-old high net worth. He's worked very hard in his life, wants to build a portfolio to ensure his wealth is preserved. He wants to build a globally diversified passive income of at least $5,000 a month, $10,000 a month, $25,000 a month, simply and safely. He wants to diversify his investments across countries, currencies, and assets. He wants to use his limited time to get effective results and predictability. He wants to save decades of frustration and millions of dollars to get the right knowledge for him and his family. He wants wealth protection, a plan B, and peace of mind. He wants to be held accountable with an accountability partner to get results. Anyone that's been successful knows that accountability is crucial. He wants a family office to help him manage all of his financial affairs. Imagine having a financial partner that could hold your hand in a bespoke way and help you get where you want to get to. Your tax, your structuring, your affairs, all in one place. He wants to have generational wealth for his family. He wants to have a fully completed, wealth plan and investor strategy sheet, and he wants to get results. So, quick one, chuck it in the chat box. Who here resonates with Jordan? Who can see a lot in Jordan, both in who he is and what his needs are and what your needs are? So I can see Jonathan and Damien and Tassina and Lorraine. Sorry if I'm missing a few, and Fern and Maria and Juliet and Helen. Brilliant. What about Victoria? She's an entrepreneur in her 50s, devoted to her family and business, aiming to build generational wealth. She's got a packed schedule, and she seeks a streamlined investment strategy that empowers her to make wise decisions, aligns with her goals, and frees up her time for her grandchildren and daughters. She wants to understand the investment landscape, so she feels empowered to make the right decisions for her and her family. And Victoria's focus is on achieving financial freedom to cherish more moments with her loved ones. Now, who here resonates with Victoria? I just want to switch the fan on. So let me know who resonates. Yep, you see a whole bunch coming through there. So whether it's Jordan or Victoria, the question is, who do you resonate with? And our whole philosophy is that it's about living life unlimited. And how do you do it? You do it through Diversification 5.0. Let me share a little bit more about what that is. I have already told you that at the end, if I go too fast, if there's a lot of information, or if you feel like there's obstacles or blockages for you, whether mentally or physically, come along to the room and I will literally take you through a live Q&A, just so that you know. At the end, we'll share the private Zoom link, but Zoom only allows 100 people in. So, it'll be first come, first serve in terms of that process. I do charge about $1,000 an hour for coaching, and this is a complete freebie. So make sure that you take advantage. If you want to take action and you want to get clear on your investment goals for this year, we've got an investor strategy discovery session, and you can literally go to the link, diversificationmasterclass.com/discover. It's got some leading questions that'll help you make the right decisions for you and your family. Okay, so there's two golden rules to investing and to diversification. The first one is to get the right information. And the second one is to get the right partners. Now, I'm a big believer, and I learned this from Tony Robbins years ago. People move 5 times more away from pain than they do towards pleasure. Let me say that again. People move 5 times more away from pain than they do towards pleasure. And so I want to take these two golden rules, and I want to explain to you how I learned them. I want to give you some stories of how painfully I watched people make mistakes in investing and lose money, and in some cases, even I lost money. So the first one is the right information. So there was a gentleman called Peter, and he was helping people invest, South Africans invest into America many years ago. I'm talking sort of 2010, 2011, 2012, just after the crash. And this is actually a video I made because he was selling houses in Detroit, where the whole city was closing down. He was selling houses in Atlanta. And I went and made a video because he was offering people finance. And I made a video outside Bank of America because there was no bank in America, and there's 8,000 banks in America. There was not one single bank in America that was lending money to international investors. And yet he was providing finance. And on paper, it sounded so good. Literally people are like, wow, I'm getting this amazing return. I'm buying this asset. It all sounds wonderful. So I made a couple of videos after I went on the ground and got the information. And as an example, in America, but specifically in Atlanta, if your house is on the one side of the street, your kids can go to the good school. And if it's on the other side of the street, your kids go to the crappy school. So there was a house that he sold that was the 3rd worst schooling district in the whole of America. Not just Atlanta, the whole of America. And so the problem is, you as an international investor go online and you see the house across the road is selling for $80,000, $90,000, $100,000. And then you see your house and you're buying it for $80,000. You think, oh, that's a fair price. But it's completely wrong because you don't have the right information. And what he was doing was he was buying these houses for $30,000 or $40,000, and he was then selling it to you for $80,000, double the price, and he was giving you bank, finance basically to buy it, and he was giving you a rental guarantee. So on paper, it all sounds wonderful, except for the fact that you were buying a property for double the price that he was buying it for, and he was adding no value. And that's a classic example of where you have the wrong information. And unfortunately, that story ended very badly for investors because they all bought properties that would double the price, and the rentals were unrealistic. And so when they went on the open market, they couldn't sell the properties for the price, they couldn't rent the properties for the price, and hundreds of investors got, from all over the world, I know a whole bunch from England, got seriously hurt in terms of losing money. Another one. So this was in Manchester. Again, this was actually pre the crash, the global financial crisis in 2008. There was a big company, again in South Africa, but also an international company that was helping investors buy student accommodation. So you went out and you bought the student accommodation, and they told you how students in England were in massive demand of accommodation. And so I know one lady that sold 100 units in Manchester, and on paper it all sounded good. Students, Manchester, it's a student town, et cetera. The problem is they got the wrong information. The development was 20 miles, that's 36 kilometers to put in perspective, from campus. Now, I don't know if you remember when you were a student, but you don't want to live 36 kilometers from the campus. And so what happened is, again, the development completed, there was a rental guarantee. So for the first year, everyone thought they were fine and earning good money. And then after the year, literally all the rents dried up because there were no students to rent it. And then the global financial crisis happened, and people realized that they'd actually overbought these properties. Like literally, if they were worth £50,000, they'd bought them for £120,000. And again, they lost all their money. Wrong information. And the third one, by the way, I could talk all day about stories, but I'm just going to bring up three for now. The third one is in northeast or northwest or northern England. And again, and by the way, this is still going on to this day. People come along and they say, oh, you can go buy a cheap apartment up in northern England somewhere, and we'll help you renovate it, and we'll stick a tenant in it for you, and you'll make a good return. And on paper, it all sounds good. In fact, the returns often are in double digits, and you think, 10+%. You think, wow, that's a great investment. Plus, you're an international investor. You don't have a lot of money. You've only got 30, 40, 50,000 pounds. So it's the only way that you can invest in England. And yet, from my experience, when you invest in C-grade areas, it always looks very good on paper. I call it a paper return, but not a real return. Like you literally don't get the money into your wallet because poor people and lower class people tend to badly vandalize properties. You've got massive renovation costs. There's a lot of turnover in tenants. There's a huge amount of maintenance. And so what ends up happening is that the paper return and the real return are completely different. You also mustn't be naive that if there's a company overseas that's helping you do all the renovations and everything else, they're marking everything up. So don't get me wrong, you can make money by going out and buying a property and managing a renovation and everything. All of us have done it, but not long distance. It's impossible long distance. In fact, I've yet to see people make money doing it long distance. The only people that make money are the promoters. So again, wrong information. And people, and I personally own 5 of these, so I know exactly what I'm talking about. They sound good on paper, and then in reality, the real returns are nowhere near close to what you are told in terms of information. So again, wrong information. What about wrong partners? So these ones are even more personal to me because I'm involved in both of these investments. So this was a development that was done in Australia. And what was interesting at the time, it was just a development. There was a partner on the ground, and I invested. And this due diligence was done by a previous. We had a property company within Wealth Migrate, and this property company with an investment committee and everything did the due diligence, and everything was hunky dory, and it was about a 28% return. It all sounded good. I put my own money into the deal, and 8 years later, 2024, we now got a $5 million hole in the ground. And there's been some massive lessons that I've learned from that. And unfortunately, very costly lessons both for me and for the investors. And really, when I look at it, 3 things happened. The first one is that project team later became Allvest, and they've run away from the project, because they don't have a vested interest. They don't have any money in the deal. So there's some very important lessons here. The developer had hardly any money in the deal either. And so he's run away from the deal. And so us investors are stuck with a $5 million hole in the ground, long distance, trying to do a development, which is quite frankly impossible. And I'm going to share with you some major lessons I've learned, but this comes down to the quality of the partner. And I always say that there's three fundamentally important things when it comes to a partner. One is, do they have their own money in the deal? Yes or no? It should be a non-negotiable. Secondly, is this a niche focus that they specialize in? And thirdly, have they been doing this for at least 10 years plus? Because it's easy to make money in a rising market. It's how do you make money when the market is going down? Here's another example. So again, that same property team that became Allvest did a whole bunch of deals with a medical partner in America called Richmond Honan. Now, I've stood on stage for more than a decade telling people how incredible medical is. And don't get me wrong, there were challenges for medical that none of us saw coming. It was a black swan event with COVID, where you basically had with COVID, the only thing that hospitals did was the ICUs, and all the elective surgery was put on hold. And all of the people that are our tenants in these buildings suddenly didn't have any work because they, the physios, the chiros, the radiologists, all of them. And so they couldn't pay their rents. So that was a black swan event. That's a fact. But the problem is they did deal after deal after deal with this partner called Richmond Honan. So no diversity of partnership. And this guy, as religious as he made himself out to be, and he had the 10 commandments in his boardroom and, blah, blah, blah. He's ended up doing fraud and not actually, he's taken the money himself and not paid the bank, and the bank's foreclosed on the deals. And so down to the caliber of partners that even when you think a partner is wonderful, if you do deal after deal after deal with a partner, you're not diversified. And, I know a lot of investors that thought they had diversified, including myself, across multiple different investments. But because it was all with one partner, when that partner's fallen over, everything else has fallen over. And so when I take these lessons of the right information and the right partners, I bring it down to an understanding of old school versus new school. And old school versus new age. And my partner Shane very kindly built this for me, because I think this is probably one of the most powerful gifts that I can give you. So if you take the old school methodology, it's all about control. The 20th century was all about control, whereas the new age is all about diversification and partnership. Now, if you take a building, I don't care what type of building it is, the way a building normally works is that you borrow about 60% of the money from the bank. Then there's about 30% that comes from private equity, and then there's about 10% that comes from equity. Now, the old school way of doing this is that you want to control the whole asset. You want to have control of the entire building. And so as investors, you want to put in about 95% of the money. So fine, the partner might put in 5%, but you want to control 95%. So you're in control. And if anything goes wrong, you're in control. And so you put in 95% of the money, which basically means that you've got 95% of the equity. Now, let's compare that to the new age way of doing it. Exactly the same. The bank is 60%, the private equity is 30%, and the equity is 10%. However, the new age way of doing it, that as investors, you only put in 10% of the capital. And so what ends up happening is that you don't have the control, and you've got far less invested. Now, some people go, oh, well, that's freaky, that's freaky. Like, well, I want all the control. Let me explain to you the challenge with this. Well, with the old school way, you've got more risk. With the new age way, you've got less risk. Let me explain to you why. Firstly, in the old school way, you've got concentration. So you've got all your money stuck in one deal. If you take that Kensington deal in Australia, you got $5 million all in one deal. Secondly, you've got all the control, whippy twang, yay, I've got all the control. But when something goes wrong, the partner runs away, and you now have to try and manage your investment long distance. So as an example, there's 82 investors for us in Australia, and we now got a $5 million hole in the ground in Australia. What do we do about it? And so, you have to fix it. And that's very difficult long distance. In fact, it's basically impossible. So now let's compare that to the new age way of doing it. where you got diversification. If you had $5 million as a group of investors, it would be better to invest $1 million into 5 deals, or maybe even $500,000 into 10 deals, because now you've got diversification. I'm going to explain to you why diversification is so important. Also, you got local investors. Okay, so what does that mean? Well, you got less control. Like you're not a 50+% owner. You're not a 75% plus owner. You're not even a 25%, which is a majority. You're less than that. But common sense would tell me, and I hope you understand this, that I would far rather invest in Australia, where 80–90% of the money is coming from Australian investors, and I, as an international investor, only putting in 10 or 20% of the money. It's far, far less risky. Firstly, the Australians know better what's a good deal. And secondly, if the shit hits the you-know-what, they will step in and try and help. Not only will the local regulators help because they want to protect their own citizens, but they will step in and help fix the problem, which is far better than a bunch of international people, which is the left-hand side over here, trying to fix something long distance. So I'll give you a good example of this. We just did a deal in Manhattan, and Shane, please make a note that I'd like to put up a picture of the Manhattan deal, where it was a $14 million deal right in the heart of Manhattan. We just closed it in December, and we literally put in $500,000. Our family office partner, Calio Private Equity, put in $1.5 million. So the total amount we put in was $2 million. The total amount of money raised was $9 million. And the $7 million came from high net worth and family office investors, institutional investors in America. Now, I feel far, far safer with my money in that deal, with all those levels of due diligence, with all that institutional capital, with all that local money. And even though I've got less control, my money is far more safe. Does this make sense? Please tell me whether this makes sense to you or not, because this is a fundamental mindset shift. The old school conservative way of doing it is it's all about control. And I must do it all myself. Control, control, control. I must do it myself. The new age way of doing it is it's about partnership. It's about collaboration. It's about diversification. It's about lack of control. And what's really interesting is that the left-hand side of the fence, the old school way of doing it, is all about being active. Now, I don't know about you, but I don't want to have to fly to Australia and fix a $5 million hole in the ground and suddenly become a developer in Brisbane. That was never my intention. The right-hand side is an armchair investor. I want to chill on a beach, sipping a martini, going, ladies and gentlemen, my partners are making me money. I've got time freedom. I can make the freedom of choice. My investments are being looked after. I can chill. Don't know which one you want. Do you want all the control and make sure that you are active, and particularly when things go wrong, you have to go and fix it? Or do you want the armchair side and be passive? The one is all about scarcity, and the other is all about abundance. And I'll be honest with you, it's at this point that if you don't resonate with what I've just said, my recommendation is leave the webinar, because we only do new age. We only do diversification and partnership. And if you want to deal with a company that's all about old school control, we're not the partner for you, because I've watched millions and millions and millions of dollars be lost and wasted through this mentality. And I've watched millions, hundreds of millions of dollars be made through this mentality. And therefore, it's non-negotiable for me as to which one we do. Why do investors diversify? The first one is preservation. It's wealth protection. The second one is plan B. They want to, not just have plan A, they want plan B, plan C, plan D. The third is they want peace of mind. They want to know that no matter what is happening in the world, they, have a plan. And thirdly, they want freedom. I've just spoken about freedom, and whatever freedom is to you, freedom of choice, freedom to live where you want, freedom to help your children, freedom to send your kids to whatever university, freedom to work for who you want, freedom to donate to who you want, freedom of time, do whatever you want. It's freedom. We call it, living life unlimited. So I know there's a bunch of other reasons, but these are the big ones that I've experienced over the last 28 years. We live in crazy times. There's wars, there's rising inflation, there's interest rates going up, there's fuel costs going up, the stock market's all over the place. We've got load shedding, and if it wasn't hard enough, Israel and Hamas decided to add to the excitement, including Iran now getting involved in the process. And we believe from our experience over the last 28 years that the only way to deal with these crazy times is through diversification. And we call it Diversification 5.0. Now, the person I trust most in the world when it comes to finances is a guy called Ray Dalio. And he literally says the single most important component to financial success is diversification. He's got a book called Principles that I'd highly, highly recommend. And he says you need to diversify across asset classes, within asset classes, across markets and currencies, and across time. And he actually gives his golden formula. So in this book here, Money Master the Game, Tony Robbins managed to get the golden formula out of him. Now, to put in perspective, Ray Dalio manages $160 billion, billion with a B, dollars. He's done it for 40 years, and his average return over 40 years per year is 21%. Now, I'm not sure if any of you are getting 21% right now on average, let alone for the last 40 years. But can we safely say that if those are his results and if those are his track record, we should maybe be concentrating and following what he's saying? Anyway, long story short, his formula, his secret golden formula, is you need 15 uncorrelated bets in an attractive array of assets that don't move in tandem. If you do that, you'll reduce the risk by 80% and you'll increase the risk return ratio by a factor of 5. Now, I know, and because this is a TED Talk, I'm moving quickly. I would normally spend half an hour just discussing this. But the bottom line is, this is exactly what happens in the financial industry, because people think, oh, I'm confused, I don't know what's going on, and it sounds like gobbledygook, I don't trust myself. I tell you what, I'll go down to my financial advisor and he can tell me or she can tell me what to do. It's rubbish, okay? It's actually quite simple. All he's saying is you need 15 quality investments that don't move in tandem. That's all he's saying. 15 quality investments that don't move in tandem. If you do 15 quality investments that don't move in tandem, you'll reduce your risk by 80% and you'll increase your risk return ratio by a factor of 5. Now, who here would like to reduce their risk by 80% and increase their return by a factor of 5? I told you earlier that I'll tell you how to do this. It's not my opinion. It's someone that's done this for 40 years and earned a return of 21% a year. So he did a TED Talk, and here's a little clip from his own TED Talk.
So what the individual investor needs to do is know how to diversify well. So the word that I would know how to diversify well and in a balanced way, to diversify it in asset classes, to diversify it in countries, to diversify it in currencies, to know how to diversify that well so that you have wealth diversification is important. Do not think that cash is a safe investment. Cash is almost always the worst investment. So you have to think about that. You should think a little bit unconventionally. Diversify well, be humble, don't market time, and be conscious of the dangers of cash.
So, I mean, this is what he said here. You can go watch the TED Talk. It is around the 26-minute. He said, you need to know how to diversify in assets, countries, and currencies. Knowing how to diversify your wealth is the single most important thing. It's not my opinion. It's Ray Dalio, who has more results than anyone I know. So how do you diversify? Well, we believe that it's diversification 5.0. You diversify across countries, currencies, assets, partners, and time. And it's all about creating globally diversified passive income. So let's go into this quickly, TED Talk style. Countries, do you want to invest in America, England, Europe, Australia, South Africa? It doesn't matter. Where do you want to invest? So I just want to share with you some of the mistakes I see people make. You know, what's interesting is that they say, oh, I must put all my money in America. Well, if you put all your money in American houses in 2000, before 2008, the market crashed and places like Las Vegas lost up to 70%. Imagine if you owned a house for $100,000 that was now worth $30,000. What about in England? Commercial property, when Brexit happened, went down by 20%. So it's not just the emerging markets that take hits. And even if you take the last crash in 2008, currency-wise, the pound against the dollar lost like nearly 40%, The New Zealand dollar here, Australia lost 46%. Like, you've got to really think through this from a diversification point. And another good story is Dr. Dolph DeRoos, that, you know, many people have read his book, Real Estate Riches. It's probably the first property book I read, and I really loved it. And I mean, this was me paying $8,000 to be on a buyer's trip with him in America, learning about American property just after the crash. This was us in Phoenix, buying properties on the steps of the courthouses. And yet his story is that, you know, he stood on stage for decades telling people how he owned commercial property in New Zealand. And the point is, he owned 8 commercial properties in Christchurch, and they were all paying, and, you know, he was financially free and everything in between. And then an earthquake hit. It hit Christchurch, and all 8 buildings were condemned. They were insured, so he went to the insurance, and they said, nope, sorry for you, it's an act of God. And so now he had the mortgage, he still owed the money, but he didn't have the like, he couldn't use the building, he couldn't rent the building out, and he went bankrupt. And unfortunately, you know, you have to diversify across countries and cities and everything, because if you've got all the eggs in one basket, it might be an act of God. Who knows what could happen? So, you know, when you look at ourselves, and I wrote this book, Property Going Global, 10 years ago, that was endorsed by Clem Sunter, and I showed you all the research in this book. And if you look at the different markets, you know, we went into Australia over here, we went into England over here, we pulled out here, we went back in about over here, and we got the timing almost perfect within 3 months within America. And I don't tell you this to boast, because when you've got systems and fundamentals and stats, and you know where to find the right information, then, you know, most people try and sell you, and they say, you must invest in London. London's the best place to invest. And they've been telling you that for 20 years. Well, I'm sorry to be crude, but it's bullshit. Because the point being is that no market is the right market forever. It just doesn't work like that. Markets go in cycles, and you need to be in the right markets, and you need to be able to move around. You need to be able to get the right information, the right partners, and to make the right investments. Then if you look at this, which came out by the SEC, which is the regulator in America, you've effectively got the stock market here, and you've got private equity here. So the stock market has earned about an 8% return over the last 25 years, and private equity has earned about 12%. And yet, from a risk perspective, the stock markets had higher risk and the private equities had lower risk. It's kind of like weird. And we've earned, over the last 10 years, an average return of about 14%. So again, just to compare apples with apples. If you want to know more about this, we actually have a course, a home study course called Wealth Going Global. It's basically the digital upgrade of Property Going Global. And it's a 6-module course. It'll teach you how to find the top 5 countries to invest in, the top 5 currencies to invest in, how to choose the top 15 assets to invest in, how do you find the right partners and avoid 80% of the mistakes, and how do you build a plan over time. So if you're interested in that, just type in there WGG, and the team can come back to you in terms of the opportunity, you know, to help you. And again, what I'm sharing with you today is literally top of the iceberg. You know, the Wealth Going Global course has been built to give you substance. And then also, you know, we've done a lot with Clem Sunton. If you talk about different countries and what countries to invest in, you know, I personally interviewed Clem Sunton. I've worked with him a lot. I mean, you can go read all his books, and you can go check out all his research, or you can just literally learn it straight from the horse's mouth, where he tells you the different scenarios for the global economy, the different flags, the different probabilities, and it actually helps you make better investments of where to invest. So that's countries. What about currencies? The third mistake I see people make. There was a doctor that I met in Johannesburg, and he had a lovely house up in Joburg, and his financial planner said, no, you must pay down your house first. And I said, dude, the rand has lost on average 6% to the US dollar over the last 40 years. Do you see that trend changing? So you are paying down an asset in a depreciating currency over time. Does that make sense? Even still better, I see investors, not just in South Africa, Australia and elsewhere, New Zealand, Canada, where they buy new developments. They're like, don't worry, it's going to go up in value, capital value. The rent doesn't cover the mortgage, so you have to put in money every month. That's not, by the way, not an asset if you have to put money in every month. And worse than that, in South Africa, it's in a devaluing currency. So you're like putting money into an investment that's actually going down in first world currencies. Kind of doesn't make any sense. You know, and again, it's not my opinion. When I wrote this book, I came up with what's called the Global Wealth Index. And that's all about tracking your real wealth in real terms. And so I did a basket of goods, just like they do CPI. a family holiday in Disney World, a skiing holiday in France, sending your kid to a private school in Australia, a Harvard tuition, and or immigrating to America or Australia. And what's interesting is that you can use any currency in the world, but if you take the rand to the dollar, it's lost 92% of its buying power over the last 40 years. So do you think that's going to change? Yes or no? You need to make the right decisions for your own investments. And I'll give you a personal story. This was a house I bought in 2013. It was our family home on Teeson Island, South Africa, one of the top 5 estates in the country. Very, very beautiful place. And if you look at it in rand terms, I was an absolute bloody hero in terms of my investments. You know, I bought it for 5.5, I sold it for 14. Over 10 years, I made 161%. Like, I'm an absolute champion. And yet, when you go and put it into dollars terms, and I don't have time to go into all the detail, I can go through it in the FAQ if you want me to. But in rand terms, I made 161%. In dollars terms, in real dollars, I actually lost $22,000. So there's me. I'm a hero in rands, and I lost money in dollars. And what's worse is if I'd taken the dollars that I had at the time, which was about $180,000, and I'd invested it based on what we've achieved with our other investments over the last 10 years, I'd have about $460,000 now. So it's about 300% difference. So this becomes a stark reality. This is where, like, you take your emotion off the table and you just look at the actual facts of what your money is doing for you and how it is working for you while you are sleeping. So I'll give you a positive of currencies. Just yesterday, we ran our mastermind. James Painter, who wrote my book, wrote chapter 2 of my book, all around currencies, and actually did the entire module on currencies in Wealth Going Global. He's an absolute legend. I've worked with him for 15 years. I trust him implicitly in terms of his view on where markets are going. And he shared with our mastermind members just yesterday that the dollar is expected to devalue against the euro by somewhere between 50 to 100% over the next 5 to 10 years. Now, if you're a good investor, you should really be looking at that, because a lot of people are like, I only want to invest in England, or I only want to invest in America. Really? I know me, I'm heavily exposed in America. Or maybe with that facts, I should be looking at Europe. And I mean, as an example, I've been trying to get into Europe for 20 years, and we've now got awesome income producing deals in Europe, in Germany. And for me as an investor, it starts to become really important to actually, you know, understand these things around currency and to take them into account. What about assets? Well, another mistake. You know, I see people, oh, but I'm diversified. I'm going to go buy a house in London. And they own one apartment in one asset. They take all their money and they buy one apartment. And they basically got one tenant, one management agent, and one income stream. Now, for me, that's the proverbial all your eggs in one basket. Yes? No? So you compare that to diversification 5.0, where over the last 12 months, I personally invested in 10 different assets, 4 different continents, 5 different currencies, 9 different asset classes, and 10 different partners. And you're going to say, oh, it sounds too good to be true. I'm going to show you how to do it. What about partners? Another mistake I see people making. I've kind of referred to this already, but someone I know personally went and invested in 8 different medical projects in America. And he thought, wow, I love medical. I love this company. I'm diversified. Well, he wasn't, because all 8 of them are not paying any dividends now. All 8 are not paying any dividends. Reason? One company, one partner, one income stream, one asset class, one country, and one currency. Yes? No? Make sense? You not only have to diversify across countries and currencies and assets, you also have to diversify across partners. And a good example of that is that we work with Callio Family Office, and they effectively a family office that helps some of the wealthiest people in the world. They work with about 65 families. And the reason they work with us is they said that the 1% can pay for advice and get results. We need to support everyone else to get access to the same advice and results. And so we work with them. Anyone that joins our mastermind works exclusively with them. And they provide a bespoke solution to your tax, to your structuring, to all of your investments, including your pension plans and everything. And you've got an entire holistic view under one roof, but you're not stuck in a box. You're not stuck in the Mauritian box or the Seychelles box or the BVI box or the Isle of Man box. you create a bespoke solution for you and your family based on your needs. And we've had phenomenal feedback from our mastermind members on the power of this personal relationship and the power of partnership. What about time? Again, diversification. Most people, when it comes to time, they look at a single asset and they say, hey, I want to invest in this asset. But they don't take it in concept of the overall picture. And so diversification 5.0 is how do you build a portfolio and how do you blend the different assets? And as an example, I had a lady, she had $100,000. And I said, why don't we find a blend between income and capital growth? She would earn an average return of about 15%. And I showed her the different scenarios of leaving her money in the bank in South Africa, leaving the money in her properties in South Africa, starting to build a diversified portfolio, and just giving her different scenarios over time. So a 20 to 25 year period, what impact will this have? Not on you today, but on your future self in 10 to 15 to 20 years time, or your family, or your children. And I want to play this little video for you, because again, this is our family office partner, Kalia, and the founder and CEO, Garth Wellman, sharing with our mastermind members the importance of this portfolio planning.
This doesn't change, guys. Asset allocation, and this is not all of the asset classes we work with, but asset allocation is going to account for 85% of your return and is the fundamental building blocks of asset management and a financial plan that's going to produce income or anything. But Anthony's going to talk to this, and this will give you very specific kind of views around the returns, the averages, and where we think the value lies.
So again, I don't have time today to go into all the different asset classes, but it's all about portfolio construction. And if you do it right, 85% of your long-term returns will come down to your portfolio construction. And just to give you an example, just yesterday, every single month, our mastermind members, we spend 30 minutes where Anthony comes in and he shares what's happening in the markets, what's happening in all the different stock markets around the world. What do we need to know with regards to inflation and interest rates? He was giving us an indication here of what happens once the rates get cut. What impact does that have on the markets so that you can make the right decisions for you and your family? What is happening with inflation? What bandwidths are we in? Because inflation ties to interest rates and these economic metrics. You might go, oh, this scares me. No, don't worry. That's why in part of the mastermind, we hold everyone's hand so that you're educating and empowering yourself so that you can make the right decisions for yourself and stop giving away control to your financial planner and naively just getting on with your life and not having a clue what is happening in terms of the markets. And then, this was all about risk appetite and where the market is at the moment. This was literally yesterday that we went through this with all our mastermind members. And we do this monthly so that every month literally yesterday, I was like, hey, what's the difference? What's happening with Iran and the thing with Israel? Is that something we need to take into account? What's happening with BRICS? Is that something we need to take into account? These are really important things that you as an investor need to be able to talk about. And that's why partners are absolutely critical, and time, because you've got to build portfolios over time that really are important. So those are the 5 things. Diversify across countries, currencies, assets, partners, and time. And I've done it in 45 minutes, so I've still got a bit of work to do to get down to a TED Talk. However, what I want to share with you is let's get practical. One of the things that really irritates me is when people stand on stage and they say, oh, you can do all of this stuff, but it's actually quite hard to do. So Dolph DeRoe says, go look at 100 houses, walk the streets, look at 100 houses, make an offer on 10, get accepted for 3 and buy 1. Yeah, that's all lacquer, but it's actually a hell of a lot harder than people think. So I don't have time to go through the platform now, but I'm literally in the Wealth Migrate platform. This is an industrial deal in America. I can literally log in. I can go into the calculator. I can say, well, if I'm going to invest $10 or $1,000 or $1 million, it doesn't matter how much money I want to invest. I can see the total returns. The green comes in. That's the income in my pocket. The red are the costs, but complete transparency. You can see exactly what your returns are plus what we're earning. You can go read all the documentation, read the risks. You can literally go through everything. But this investment is going to get you an 8% return, income return in cash, US dollars, and nearly a 15% return overall per year. Right, I like this deal. I'm going to invest $10. I literally go in, I acknowledge and sign the digital contract. I go agree, and I go make investment. And can you believe it? I go to my view portfolio, and I've literally just invested in America, in an industrial building in America in not only 30 seconds. Now, I want to fly across the world. I go look at Germany. Again, I go look at all the information. Laka, I like it. I go invest in the deal, $10. I go digital, sign all the agreements. Boom. Oh, what just happened there? I go agree. I go make investments. I go view portfolio, and boom. I've now just invested in an industrial deal in America and a German income mixed use deal in Germany. So, ladies and gentlemen, anyone that tells me that Ray Dalio is not possible, and I've just done it from $10, I honestly believe is lying to themselves. Can I have an agreement, yes or no? Just type in there yes or no, that 10 years ago, Ray Dalio's formula might have only been for the wealthiest, but nowadays it is available to every single one of us. Yes or no? You cannot tell me, in my opinion, that you cannot diversify across countries, currencies, assets, partners, and time. Because I've just done it for you. I've literally just done it for you in under a minute, live on the page. And all you got to do is log into World Migrate, fund your wallet, and be able to invest like that. So I wanted to give you a practical example. Now, for those of you who are feeling overwhelmed, some people like to do it all on their own. I get it. You get those people. I want to do it all on my own. I spent my whole life doing it all on my own. By the way, I spent 14 years of my life doing the same thing. I went and read all the books. I went on all the courses. I got the degrees. I have an honors and a master's cum laude. I've got PDP, Property Development Program, which is from the business school. I've got CRS, Certified Residential Specialist, which is the top one out of America. I've got AIPP, which is the Association of International Property Professionals, which is the top one out of England. Trust me, I've done it. And my logic was, I thought I had to do it all myself. And then I realized I had this epiphany moment about 10 to 12 years ago, where I realized it was all about partnership. It was all about collaboration. And by doing it through partnership and collaboration, I could dramatically reduce my risks and I could dramatically increase my returns. So if you're feeling overwhelmed, can I have your permission to share with you a solution where you don't have to do it on your own? Yes or no? Can I have your permission? Because I'd be very surprised if people aren't feeling overwhelmed, because that's, generally when you're in your head and you're trying to do it all yourself, you feel overwhelmed. But maybe there's another way, and all I need is your permission to share with you the other way that I learned. Okay, a bunch of people are saying yes. So, firstly, for everyone, for free, we're going to, as soon as I'm finished sharing with you, I'm going to jump in a Zoom room. I'll answer any questions you've got, anything you want. And it's my favorite thing. Anyone can do a presentation, but come and challenge me and ask me the hard questions. There's only 100 seats though. If you resonate with Jordan, the 55-year-old who's worked all their life, built a portfolio and wants to preserve their wealth, or Victoria, who's in her 50s and devoted to her family and business and aiming to build generational wealth. If you resonate with either of these people or both, and you want what they have, then I highly recommend that you consider what I'm about to share. So I want to challenge you with an extremely direct question. Imagine if a doctor came to you and said, you've got a serious medical condition. Now, don't get me wrong. This doctor comes to you and says, listen, for your health, for your life, you have to lose 10 to 15 kilos as quickly as possible. Now, I hope this never happens to you. It's a hypothetical situation, but it illustrates a very, very important point. And I remind you, the doctor says, you absolutely must achieve this goal no matter what. It's not a should, it's not a maybe, it's not I'll try my best, it's a must. You've got two options. The first one is you go buy a home study course, or maybe you come on a webinar and watch Scott or whatever. The second option is you hire a coach. You hire someone that turns up on your doorstep every morning, knocks on your door and says, time to rock and roll, time to go do some exercise. Which one would give you more confidence? Doing it on your own or the coach to get the results? Remember, your life depends on it. And again, it's a hypothetical situation, but it's a very real situation to help you realize the difference between your wants and your musts. Is it the I'll do it on my own, or is it the coach? I can see a number of people are saying the coach. I agree. I think it's a fairly no-brainer that the coach would be the option. Now, what about if this was the same for your wealth? What about if you've been saying to yourself for years, if not decades, I should diversify? You know what? New Year's resolution. I'm going to diversify. That'd be a good idea. Or what about I should build passive income, so that I don't have to worry every month or every year about how I'm going to pay the bills. Imagine if I had the freedom and the income coming in. What about if you change that from a want into a must? What about specifically building globally diversified passive income? Now, for some investors, those that are super experienced, sophisticated, confident, or just really motivated beyond belief, like I was for 14 years, well, we've got just what the doctor ordered. I've told you all day, there's only two things you need to do: right information, right partners. Now, for the right information, we built it. It's literally Wealth Going Global. And if you come to the Zoom room, the FAQ, I'll literally take you through it and show you how it works. Or for the right partners, we've got Asset Mastery. We'll introduce you to the right partners around the world in all the different asset classes so that you can do it, both from the comfort of your couch. We've proven for over 2 decades that it works by helping thousands and thousands of investors. But we've also realized there's an even more effective option. And that's when someone works with you. Myself or one of my team members work with you to help you build your wealth system and your portfolio. It's literally one-to-one in terms of the process. But the biggest challenge we've always had is, how do you scale that? How do you help more people? Because it's costly, it's got a human cost. And so people always say, how? And we basically simplified it by the same philosophy that Uber, changed the taxi industry, that Airbnb changed the hotel industry, that Netflix changed Blockbuster. Because after 20 years of going through all of this coaching and masterminds and hearing from thousands and thousands of investors, we realized that the current space is broken. And so we fixed it. And firstly, we built a home study course with the right information and the right partners. And secondly, we copied what works. According to Harvard, you have a 400% better chance of getting success with a coach than doing it on your own. If you're one of the best teams in the world, Man United, and don't get me caught up in soccer, or the Springboks, or the All Blacks, or Andre Agassi, or Serena Williams, or Tiger Woods, or anyone, the best business people and the best sports people in the world all have coaches. Every single one of them. Do you have a coach? And then what's really interesting is, according to Harvard, you have a 400% better chance of success if you have a coach. But what about if there's even a better way?
This is extremely predictable. Tons of research around it. Humans change 5 times faster in groups than they do with a one-on-one coach, consultant, or therapist in that case.
Wow.
So I started looking back at business models and people who had done this effectively over the generations. Masterminds aren't new, folks. They're not new at all. People have been doing this for thousands of years. And when you put a collection of people together who are all committed, all driven, and all so want to make the right changes happen, and you give them a leader to follow who's willing to get in the trenches with them, all of a sudden you start finding real, rapid life or business transformation.
So let's just take what he said there. There's tons of research that humans change 5 times faster. Remember what I said on the very first slide? 5 times faster if they do it in a group than in a one-to-one coach. So remember, a coach, you 400%, which is 4 times better. And in a mastermind, which is a group of people working together, you 5 times better. So in my maths, according to that, it's 4 times 5. So you can do it on your own, okay, or you can do it with a coach, you're 4 times better off, or you can do it in a mastermind where you're 20 times better off. You have to have a collection of people who are all committed, all driven, and so want to make the right changes happen. And you give them a leader to follow who's willing to jump in the trenches. All of a sudden, you find real, rapid life and business transformation. If you want real, rapid life and business transformation, then I have a question for you. You're sitting here in your comfort zone. Most of us are. Do you want to come to over here, which is uncomfortable and it's difficult and it's outside your comfort zone, but it's where the magic happens. And that's why we created the mastermind, to help people achieve their results. Who's it for? People who like personal development, people that are coachable and can learn and grow, It's having a growth mindset. People who want passive income, people who want to earn at least $5,000 passive income, and people who, you know, are on this journey and have started the investment process, etc. But in simple terms, it's people that want to get there as fast, simply, and safely as possible with at least hassle and complexity. You know, I learn all the time. A lot of people have been investing for a long time. They want to get rid of the hassle and the complexity. Who's it not for? It's not for complete beginners. It's not for time wasters. It's not for people with no capital. And it's not for difficult personalities. And so what's the formula? Well, it's quite simple. It's everything I've tried to share with you today. It's diversifying across countries, currencies, assets, partners, and time. It's all about building globally diversified passive income. How does it work? 5 simple steps. The first one is the setup. You meet with me. It's a personal one-to-one coaching course or coaching call, and we get very clear on your top 3 outcomes. What is it that you want to achieve in your life? Where do you want to be? What are your top 3 outcomes? Secondly, you meet with Calio, and they get very clear on what is your current portfolio. So what do you currently have? So where do you want to be and where are you at? Then it's about building a plan to get from A to B. So this is where you want to be. This is where you are. How do we optimize what you have? And how do we build a plan to get from A to B? And then most people have a plan. Well, actually, I lie. Most people don't even have a plan. But the people who do have a plan, very few of them are good at executing on their plan. And so every single month, we run a process of 2 steps. The 4th step, step 4, is about accountability, mindset, and execution. So we check in every month. What is happening? Where are you at? We've got an accountability coach. We've got an accountability partner. We work on your mindset to keep you in a towards state. It's about your execution. There's no point in having a plan if you're not getting significant momentum along the plan to getting results. And then finally, it's all about investment, the financial knowledge, the actually investing and getting the results. 5 simple steps. Where do you want to be? Where you're starting from? Get a plan to get from A to B. The accountability, the mindset, and the execution to make it happen. And then the actual investment and the knowledge to get the results. So you include in this, you get Wealth Going Global, which I've already said to you, the top 5 countries to invest in, the top 5 currencies, the top 15 assets, how to find the right partners, and how to build a wealth plan over time. You also get Asset Mastery, which is the top 15 assets in the world and all the right partners to invest in. So you've got access to the right information plus the right partners. We had 2 choices. The normal mastermind out there nowadays is about $50,000. We didn't charge that. And the reason that we're not charging that is we're not a coaching company. We're an investment company. We want to help people get results. We would far rather have people that are committed, that are investing and getting results from their passive income. That is what drives us. So we don't charge 50. In England and Australia, the price is about 25 normally. We don't charge that either. We want to leave meat on the bone so that you can invest in deals. Many people say that I'm absolutely crazy and that it should be at least $10,000. And you know what's interesting? We don't even charge that. But imagine if we did charge that. If I was going to charge you $10,000, would it be worth it if 12 months from now you had significant momentum towards your freedom goal? Just think about it. Would it be worth it for you? Yes or no? In fact, if you did all of this, would it be worth it for you if it provided you with peace of mind to know that your family and your future was secure? Would that be worth 10,000? What about if you did all of this and it found a way to protect your wealth, the money that you've worked so hard for and that you've created, and to protect it? Would it be worth 10,000? What about if you did all of this and it could save you a decade of time? Many of you have sat around for years, even decades. I've had people come to me and say, Scott, I've been following you since the early 2000s and I've done nothing. What about if you could save the next decade of time? And then finally, would it be worth it if you did all of this and you had globally diversified passive income and it could give you the peace of mind? Would that be worth $10,000? So I just need to answer this. Would that be worth it to you? Just think about it personally. So I had an interesting story back in 2012, 2013. A gentleman called Michael Anisette wanted to come on a buyer's trip. In those days, he used to jump on an airplane with me, fly to America. We'd jump in a combi and go look at houses. And it was $2,000 deposit to come on the buyer's trip. And he got hold of me and said, hey, I don't have $2,000. And I was like, sure, we got a bit of a problem because we're going to buy houses that you need like $100,000 cash to be able to buy them, which is a bit confusing to me. Anyway, I did a deal with him and we decided to make it a little bit more affordable for him and whatever. And it's really interesting because Michael went on to not only invest, he told me he was very, very clear that he wanted to build a certain passive income amount for his daughters so that they could live anywhere in the world, they could study anywhere in the world. And I'm super grateful that, he did join because it taught me a massive lesson. Because 10 years later, he moved to England. His daughters are in England. They both have the freedom to live where they want, plus study where they want. And it all started 10 years ago. And I realized with regards to that story of whether we charge $50,000 or not, it's far better to make it more affordable for people and for them to get the results. And as Michael said, it would, it's the best money he ever spent, but it would never have happened if he had tried to do it himself. And it really reminds me of Zig Ziglar's principle, which is what we try and do to build this company. You can have everything you want in life if you just help enough other people get what they want. You can have anything you want in life if you just help enough other people get what they want. So that's why we make the mastermind as affordable as possible to try and help people. The one challenge we've got is that it is still timeless. You're dealing with me personally, you're dealing with Callio personally, you're dealing with Alex personally. And so on that basis, we can only onboard 5 people. So it is there are constraints in terms of that process because it's not a scalable solution. How do you apply if this is something of interest to you? You literally go to diversificationmastermind.com. So just go to that link, diversificationmastermind.com. I'm sure Shane will chuck it up in the chat box. There it is for everyone. And what it is it's an application call. So you'll meet with Alex or myself, and literally we want to understand what you're trying to achieve. We want to understand what the risks are that you're concerned about. And we also want to see if you qualify. And what we mean by that is that it's really important for us to understand what you're trying to achieve. We know what we can do to help and to make sure there's synergy. Like if you remember back to that mastermind video that I showed you, you got to have a group of like-minded people that are committed to a journey. And so our very, very strong need is to make sure that we're getting the right people on board and that we can help them achieve their objective. And obviously the beauty of a call is that you also get to meet us and to make sure that it's right for you in terms of that process. Because we want people that are committed. We want people that get results. And my only request is that when you set up the meeting, please make sure you turn up on time. Your time is important. Our time is important. So we want to deal with committed people. There are only 5 places available. As I said to you, there's a constraint we've got both with our time and with Callio's time. But on average, people see a 344% return from coaching and over 700%, on the investment in coaching. And, you don't have to take my word for it. You can go and look on, go to Trustpilot or go to that page, Diversification Mastermind that I've shown you. And you can go see all the testimonials written and videos from all the other people that have participated in it. Now, in terms of a guaranteed satisfaction, it said in that video, it's someone who's willing to jump in the trenches with you. I don't know if you've picked it up from my energy on this call, but there's one thing about me, I like to get results. And I'm the sort of person that will run through walls to make it happen. I don't have all the answers, but I've certainly got the persistence. And so I can't guarantee your success, but I can guarantee you we'll do everything that we can to help you achieve it. But ultimately, it's about holding your hand and going on a journey. And you need to decide if you want an accountability partner to help you achieve the results that you want in your life. For those that are financially orientated and they say, well, Scott, what's the return on investment? I actually did it for a gentleman. He had $12,000 to invest. He was earning about 7% with a company called Allen Gray. And I said, well, if you could earn an average of 15%, which is what you're earning between ourselves and Callio, and you're investing $1,000 a month, and you put $5,000, investment in yourself, something like towards a mastermind or something like that, over 5 years, you would have, you would literally invest $5,000 in today's money to make $12,000. That's kind of a no-brainer if you think about it. So you invest $5,000 today to make $12,000, in today's money over the next 5 years. And if you did it over 10 years, it would be investing $5,000 today to make $50,000 plus dollars. And if you do it over 30 years, it becomes a little bit silly, but it's over $1 million. So if you are interested, then I highly recommend that you go along to diversificationmastermind.com. I want to play you a little recording of someone that did a one-to-one with me and the power that this had on them.
Hi, Scott. This is just a quick fan message. Just wanted to thank you again for our coaching call the other day. And then also wanted to thank you for the brilliant idea of that, sort of publicly putting in your goals in that Google Sheet. I see that the Google Sheet magically populated itself since the first time I saw it. And I must say the 2024 goals are very inspiring. And it's amazing to see. I found it incredibly supportive to see, people's just the amount of energy and the goals. And it's really inspiring. So just wanted to thank you for that. I really enjoyed reading everybody's goals. I haven't read all of them, but and somehow it's just really helpful. All right, well, have a fantastic day and we'll see you in February. Bye.
Okay. And then, with regards to this gentleman, he was in England. He had a property portfolio. A couple of them were cash flow positive, a couple of them were cash flow negative. And so we did as part of step 2, we did a portfolio analysis with them. We helped him look at how he can optimize his portfolio and change it from £750 per month in negative to £2,000 per month in the positive. Maria, I see your message, and that's very sad news. This one here was meeting with Calio. They had investments all over the place, England, America, South Africa, and a whole bunch of advisors. And it was all about simplifying it and bringing it all under one roof in terms of Calio family office. And just the peace of mind that it brought them to know that they've got all their admin, their tax, and their structures all in one place with one holistic overview in terms of that process. Niels and Catherine are in the medical space. And again, he said, I must say, listening to all your Zoom meetings has made a huge difference in understanding investment options. I don't feel that stupid anymore when having discussions with the likes of Calio and others. Of course, I don't know enough, but at least I can follow their opinions, comments without being completely in the dark. It's so liberating. So it's not just about results, it's about knowledge and feeling empowered. And just a few other people, mind-blowing, very valuable, extremely enlightening. This perspective is very valuable. Cynthia is a single mother. She is an American that lives in Italy. And it's really interesting. She said, thank God for this mastermind, the partners it brings us, and the exponential learning curve you gifted us. And we've actually got a video. We're going to share with you a little link now where you can go and watch it. It's, 18, 19 minutes. And she talks about her story and how she joined the mastermind and within 3 months was actually earning a passive income and the significant difference that had on her life as a single mom. Abdul is in his 70s actually, and he's an auditor, chartered accountant, and he talks about his story, and we'll also share that with you. So again, if you want to follow any of these people or get the same results as them, then go to diversificationmastermind.com and book a call with one of us. Why we believe you should work with us? Well, having done this for 20 plus years, I've heard all the excuses, but the 3 biggest ones I have is I don't have the time, I don't have the money, and I don't have the knowledge. Well, the mastermind's been created for time poor people. So I say to people, if you can't invest 3 to 4 hours a month, literally 3 to 4 hours a month, to help your future self create a globally diversified portfolio, globally diversified passive income, if you can't invest 3 to 4 hours per month, you're never going to have it. Let me be very clear. You're never going to have it. So we've created it for time poor people to get the results as quickly as you want. I don't have the money. Well, we've made it as cost effective as we possibly can. And today I've showed you, you can get started even from $10. And finally, I don't have the knowledge. Well, we've created this resource. We've got the university. We've got the mastermind so that you've got access. We've got all home study courses to get access to the knowledge and the partners. And finally, why we believe you should work with us. to my knowledge, we're the only one that do global diversification. Everyone else will help you do structured notes or medical buildings in America through the Seychelles, or London property, or go buy a house in Northern England, or whatever. But now you've got 15 different assets in 15 different structures with a shitload of complexity, versus you could put it all in one place. And just, putting my money where my mouth is, I believe so much in masterminds and the significant change that they've had in my life. I paid $14,000 a year to be part of Singularity University. This was me and Peter Diamantes. I paid $20,000 a year to be part of Roger Hamilton's Entrepreneur Network. I paid $40,000 a year to be part of Mavericks, which got me to Necker Island. And I spent 2 weeks with Richard Branson on Necker Island. And I spent $50,000 a year to be part of Tony Robbins and his whole business mastery network. And so if this is something that interests you, and if you want wealth protection, plan B, peace of mind, diversification, freedom, global citizen, empower your children, immigration, ultimately to live a life unlimited, we've helped over 4,000 other people do it. Why not you? That's the formula. You can do it with us. You can come on a journey with us, or you can do it yourself. But the formula is simple. You need to diversify across countries, currencies, assets, partners, and time. And it's all about globally diversified passive income. If you join the mastermind, you'll get priority access to me and the team. You'll get access to our tax and currency partners. You get access to asset, class mastery, to Wealth Going Global, to Clem Sunter's masterclass, to a 12-month Wealth Hacker subscription, access to the best immigration agents and partners, access to our wealth weekends, and even access to our buyers' trips. And a little bit of tough love. Alex asked me to put this in, because what he's happening is he's talking to people and they're like, right, the mastermind's for me. And then they go talk to their brother, their mother, their husband, their wife, their, whatever, their financial advisor, their lawyer, their friend, whatever. And it's interesting because I wanted to share something with you. I get a lot of comments from people who are using their friends and family as an excuse for not following their dreams or pursuing their goals. This is a huge mistake, as one that has the potential to haunt you for the rest of your life. This is because you rely on other people's approval. Even though those who love you and who care about you most, you will always be their slave to their emotions and what they think, feel, and believe about you and your potential. And their belief about your potential is almost always just a reflection of what they think, feel, and believe about themselves and their own potential, which for 99% of the population is extremely limited. Plus, and this may or may not apply to you, so proceed with caution. Of course, your friends and family don't believe in you. You have no track record of success. You start late and end early. You whine, complain, and make excuses. You don't finish what you start. You talk the talk, but you don't walk the walk. This is why they want you to be safe. Lower your expectations, fit in, conform, and do what everyone else does. But as you already know, that is not a way to live an exceptional life. The only solution then is to drastically change your actions. Prove them wrong. Say what you're going to do and then do it. Get up, go, take MIA, massive, imperfect action. This is your life. Nobody is coming to save you. You got this. So if your intuition is telling you that this is the way forward, then set up a call with Alex and the team, and go and ask for opinions. I got no problem with that, but be fully aware of my little tough love and how others are going to hold you back, and how our bodies and our brains consistently want us to go back to the comfort zone. And my invitation was to drag yourself out of the comfort zone. It's not easy. It's not even nice, but it's necessary if you want to achieve your goals. And so if you like that, go to diversificationmastermind.com, book a call with us. We always like to give you resources. So if you want to go to Diversification Masterclass /bonuses, you'll get a whole bunch of resources there for free by turning up today, including some of those testimonials. So thanks very much, Shane, for putting in that in the chat box. And now, for those who want to take action, go along and fill in that investor strategy discovery session. This will help you. It's got some great leading questions. So it's a nice thing to do if you have listened for the last hour and you're like, cool, what do I do next? And or come and join me in the live Q&A. And literally you go to diversificationmasterclass.com /QA, and it's got 100 people seats capacity. The meeting ID, you can screenshot this if you want, is 864-3702-4567, and the passcode is TED. And if you're watching the recording, obviously I'm not there, but we will try and make the recording available. So there it is. You just click on that link like Shane has just showed you, and you literally go here and you go open Zoom. Oh, and I need to start a new meeting. But anyway, you get the point. I would go into a new meeting. I'm not going to do that now because I just want to finish off. Just to show you here, also, if you want to apply for an investor discovery session, it's there. Ladies and gentlemen, I want to thank you very much for your time. And what's really, really important, I love to live by an African proverb. If you want to go fast, go alone. If you want to go far, go together. I welcome you on a journey. I've had the incredible privilege of walking this journey now for 28 years with thousands of investors from all over the world. I'd like to walk the journey with you and help you get the results that you want in your life. It's always an honor and a privilege to share with you. I hope you enjoyed my first TED Talk, although Shane's going to give me lots of shit because I've got to cut off about an hour before I do my official TED Talk. But anyway, I hope you enjoyed it. I hope we added value to you. Thanks very much for your time. And for those that are coming to the Zoom room, I'll see you there. Thanks very much. Cheers.